Prop companies are getting a lot of attention these days. Even if you haven't heard of them directly, you've likely seen traders online getting access to large accounts or receiving impressive payouts. They have quickly become a noticeable part of the trading world. So, what makes them so popular? For example, you can manage a large trading account by paying a relatively small fee. That fee is refunded after passing the challenge. It's a way to work with serious capital. But capital is just one part of the story. Prop companies set clear trading rules like daily loss limits, profit targets, and maximum drawdowns. It helps traders stick to their plan, keep emotions in check, and avoid impulsive moves. Over time, that helps build real consistency. And what happens if you prove yourself? If you show stable results, you are not just funded, you are promoted. Some companies increase account size, others give better profit splits or scaling plans. In basic terms, prop companies give you access to a much larger trading account, much bigger than you would pay to try. If you follow their rules and make it to the funded account, you can start receiving payouts. Depending on the company, you get to keep around 80 to 90% of the profit. I break down the process of choosing a prop company into three stages. The first stage is the search. I select all the companies I trade with the website called Prop Firm Match. That site alone is more than enough for you. Step 2 is checking the reviews. I usually start with Trustpilot, though sometimes Prop Firm Match has enough feedback to get a clear picture. What matters most is volume, ideally around 1000 reviews or more. Another key factor is the share of 1-star ratings, which shouldn't exceed 10%. The 1-star reviews deserve the most attention. There's little value in reading glowing feedback, but negative comments can reveal real issues. If you see the same complaints repeated, things like denied payouts or failure to provide funded accounts, and especially if these reports spike within a short time, that's a red flag. Companies with widespread issues like that should be avoided. If, on the other hand, the majority of complaints are about minor inconveniences such as slow support or general service quality, that's actually normal. It usually means that there are no systemic payout problems. Right now, I'm launching a giveaway. The prize is access to a private community focused on prop companies. Inside, you will find challenge passing strategies, a clear system for working on funded accounts, and ongoing monitoring of prop companies' hidden rules, the kind of things that usually stay behind the scenes. This is information that saves you money, time, and helps you get results faster. To take part, it's simple. Just subscribe to the channel, drop a like, and answer the question I will ask later in the video. Well, now I wanna show you how you can make money on prop accounts while trading at a loss. Let's say that at the beginning you set aside one budget both for trading on a personal account and for buying prop accounts, of which you took 4. Starting to trade during the first phase, you lose a total of 10%. On a personal account, you just lost a part of your money, but with the same drawdown on the prop accounts, one of them moves onto the second phase. Then, as you continue, you lose another 5%, but at the same time, one of the accounts has already become funded. And at the third stage, you make 2.5%. The gain on a personal account is minimal, and there you are, still in a heavy loss. But on the funded account, you recover your costs and in the end, break even, while at the same time having an account of $100,000 in your hands. That's why mathematically prop accounts are far more advantageous than personal accounts. Now let's talk about the rules. In most prop companies, they are pretty much the same. They require a minimum number of trading days, but that can mean different things. For one company, just opening a trade counts. For another, you might need to make at least 0.5% profit for it to count as a real trading day. There's usually no time limit to finish the challenge, but if you stay inactive for too long, like 30 days without trading, your account can be deactivated. These days, news trading is practically restricted everywhere. In some companies, you are only allowed to trade during the first and second phases, and in others, it's completely banned. In most cases, simply holding a position during the news won't get you penalized. However, there is a specific time window, usually 5 minutes before and after the news release, during which you are not allowed to open, close, or modify positions. You also can trigger stop loss or take profit during that restricted time. Breaking this rule can lead to various penalties. In some cases, you might lose your profits. In others, your trading account could be closed or your entire profile could be permanently banned. The restricted news events are those marked with red folders on Forex Factory. Make sure you are checking the news for the specific asset you are trading. Once again, please be careful with the rules. Exceeding the lot size by 0.01, violating the consistency rule, accidentally logging into the trading terminal with a VPN, or any other misread or forgotten rule can lead to loss of payout, account, or even the entire profile. And you will be the only one responsible for that. And here's the question for participation. Share your detailed answer in the comments to join the giveaway. Results will be posted on Discord. It seems like there are already too many rules, and we haven't even discussed the ones that might have hidden details. First thing to check, are you allowed to use a VPN? Some companies allow it, others don't. Either way, it's safer to log in from the same IP to your trading account. Fintech has a rule where if you don't break the company's official rules but keep blowing accounts consistently, that alone can count as a violation and get your account banned. Another rule, this time about martingale on Blueberry. Now, after hitting a stop loss, you can't open a position not only on the same asset, but even on one with a strong correlation. Which sounds like total nonsense, because the lot size you would use on Nasdaq is tiny compared to an S&P, even though those two are highly correlated. And of course, they don't give any list of which assets they consider correlated. Also, check if there is a dynamic drawdown. It means your drawdown limit increases as you make profits. There can also be restrictions such as daily profit limit, a risk limit per position, and automatic trade closure once a certain percentage of profit or loss is reached. In one company, for example, I came across a rule where if you didn't purchase a news add-on, you weren't allowed to trade during any red news events, even those unrelated to your asset. Always check the maximum allocation size. Sometimes buying an additional account won't make any sense. Quite often you have to keep a trade open for a few minutes so your average holding time stays above the set limit. Otherwise, you will be classified as a scalper, which can also get you banned. Make sure to check if the company has a consistency rule. That means your profit needs to come from steady trades rather than made from a single large position. There can be tons of such pitfalls. These are just the most common ones. That's exactly why I can say with absolute certainty that if you work with a particular prop company, it won't go bankrupt or cause you any issues. Many companies that ended up bankrupt used to be at the top and look totally trustworthy. And here's the main rule I have come to after seeing all these situations. There is no perfect way to avoid problems with prop companies altogether. The key principle that can really protect you is diversification. Choose at least 10 of the best companies and buy no more than one account in each. So now you know the advantages of prop trading accounts and how to avoid common mistakes. You've learned how and where to find prop companies and how not to fall for their tricky rules without having to pay for that experience with your own money. In closing, I would really appreciate it if you give this video a like. Don't forget to subscribe, a new video is already on the way. Thanks for watching, take care and see you next time.